What's up, YouTube? Today is day number 9 of the $1,000 account challenge, and today we are up $218 or 18% of the total portfolio balance. This is the largest day of the challenge so far. Yes, I did size up, and I sized up on a quality setup that I saw a really good opportunity on. So I want to break that setup down for you, let you know what I saw, and kind of walk you through why I took the entry where I did and why I sized up on this setup itself. For those of you that don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. So we are going to start off actually on the day trade watch list with the watch list posted before market open. Amazon was a long idea today above $149, and in the alert room before the market even opened, I told you that Amazon is my top watch. That was actually 1 minute after market open, but here 9:14 a.m. I said Amazon will be my top watch today. We have been waiting weeks for this to break out. Keep an eye on it. It needs to hold over 148 to be relevant. This is all key information. Needs to hold over 148 to be relevant. And then literally 1 minute after market open, I said Amazon top watch. Load it long. Go ahead and prepare. Prepare yourself. Get ready to take this thing long. So what's the setup here? It is a multi-week range formed on the daily chart time frame. Look at all these candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, nearly 15. Plus, if you want to include this data as well, I mean, you're almost looking at 1 month from this red dotted line all the way over to almost that red dotted line of consolidation, with 148 being the clear line of resistance right here. So this morning, when I see Amazon on the 5-minute time frame breaking above $148, which is we have a trend line drawn at 148 right here. When I see Amazon breaking above 148 in the pre-market, I'm thinking that there's a good chance that this is going to run today and give us a breakout move topside above 149, hopefully up to 150 plus. So 1 minute time frame. This is where I take my entry, but I did so breaking the rules because it was such a high quality setup. I mean, a multi-week range that we have been watching for weeks, waiting for it to break out. We're finally getting that breakout confirmation this morning. I mean, that is why I sized up on this trade. So in the alert room, 9:32. So 9:31, I'm telling you, 1 minute after market open, Amazon top watch, load it long, prepare yourself. The very next minute, 2 minutes before I even take the entry, I tell you exactly which contracts that I loaded, which were the 150 calls for Amazon. So 9:31 is right here. 9:32, I'm loading the contracts, and when we get the pullback to 148. So remember, before market open, I said it needs to hold 148 to be relevant, right? The reason why is because on the daily time frame, all of this resistance, if Amazon is to continue up, should act as new support. Old resistance can become what? New support. So back to the 1 minute time frame, 9:34 a.m. Eastern time. Amazon, I took the early entry, meaning I took the entry prior to the 5-minute passing, right? We don't trade in the first 5 minutes normally, but this was such a quality setup that we went for it. Here's the contracts that I took. My stop loss is 148. Here is my fill price, and I said you don't have to follow me here, but I'm assuming the risk based on how long this setup has been shaping up for. So we get the pullback on Amazon. After running the high of day, we get the pullback on Amazon very close to 148. So we're going to manage here the risk versus reward. And I entered pretty much at the bottom of this candle. So your potential risk off down to 148 looks like that, where your potential reward up to the high of day, even we got to move past high of day, but even just up to the high of day looks like that. So this is your potential reward. This is your potential risk on a setup that has been consolidating for weeks. I took this setup long right there for that reason. Even though we did not get a break of the long trigger at 149 at that time, and even though we were within the first 5 minutes, this pullback to assume this small amount of risk is so worth it for me on this setup that is such high quality. So we get the move from there. It's just managing the trade. Immediately, we are green right away on the trade. A little bit of a pullback here, and then the move up higher, and then the breakout into the high of day. Wound up closing out the trade for 20% here, well, scaling out of the trade for 20% there, 30% there at the top, and then I closed the remainder out. I still had runner size because I thought that this may go. I closed the remainder out, I think over here, I need to check the timestamp. I closed the remainder out for break even. So I said move stop to remainder on break even, now up 10%, now up 20%, now up 30%. Reminding you again, I moved the stop to break even, should be a risk-free trade from here. Next sell target is 126. 940, let's see here, 944, closed out the remainder of the position. So that would be as this, I think it was on this candle, but then maybe as this one dipped lower at the turn of the minute. So yeah, over here is where I closed out the remainder. We'll go ahead and mark that. What I think happened, there was some discrepancy here about this trade. And what I think happened was traders didn't want to take Amazon long down here. And instead, they were waiting for the break of 149. So rather than getting that nice low risk entry, right, down to 148, they're entering way up here, maybe here or up here. I don't think at the top of this candle, probably up here or here on the break of 149, where, you know, your risk off at that point should be 149. So if you're entering there on this candle, your risk off should be 149 at that point, right? The previous high of day. If that doesn't hold as support, then you close the trade out there. Old resistance, again, becoming new support. But I don't think that traders did that. I think that they probably chased the move up here, took the entry long on the break of 149, and then risked off all the way down to there. So your potential reward topside, you know, at this point, you're entering at the resistance, at the high of day. You're not following the proper risk management strategy. Way too much risk assumed on this versus the potential reward. Now, I did think that this would continue to go today, but if you're not in on the position down here, your best move at this point, if you miss the move, right, if you're late on the trade, is to wait and let's see if it confirms, right? 5-minute time frame, these candles did not close over 149. So if you're taking the entry on this wick above 149, I mean, you're chasing the move. You're getting faked out, right? So if you miss the entry and you're 5 minutes late on it, wait, because 5 minutes for day trading options, it makes a big difference. And you can see that here. I mean, from the entry to the exit, 1, 2, 3, 4 minutes, that's a 20% difference between my entry and where other traders are trying to enter. So most likely what happened here is I was selling my contracts to you because I'm closing out up here and I know somebody was entering up here. So you're buying my contracts at 20 after I get a 20 or 30% gain. But I wanted to walk you through that. I didn't take any other trades on the challenge account just for transparency. I took 2 trades on Tesla. This one here, short below 233. Got the move down. We were up about 15%. I closed this one at break even. I tried it again short here. Closed this one for about a 10% loss. I made the right choice there because it did continue to push up and has continued to make higher lows and higher highs. So, you know, nothing going there. But that trade was taken. Those trades were taken on my personal account, not on the challenge account. So the only one on the challenge account today was this single Amazon trade where we nabbed 20 to 30% and then closed the remainder out there for break even. Okay, so a couple of takeaways from this video. Number one, if you see a high quality setup, size up on it. It doesn't have to be my high quality setup, but whatever you deem as your high quality setup. And you won't know what your high quality setups are until you review your journal. And a lot of traders don't want to do this and you don't want to hear this answer, but you have to review your journal. It's not enough to just journal your trades. You need to go back and review them. Compare and contrast your winning trades, especially your biggest winning trades, and find commonalities between those winning trades. What you may find is that you excel at setups where you have a multi-week range that is breaking out, right? That's what we're getting on Amazon today. Or you might find that you excel on setups that drop at the open and then tend to reverse. So maybe you're a reversal trader. Or you might excel at setups that have gaps overhead and start to work on filling that gap. Whatever it is, identify it. That is going to be your A+ setup. And when you see that setup presenting itself to you and you get the confirmation that it is moving the way that you expect it to move, size up on the trade. That's where you're going to make your money. Okay, that's all I have for you today on this video. Press that like button for me if you haven't done so already, and also consider subscribing to the YouTube channel if you haven't done that either. It's the best way to support this type of work that I do, and it's free to do. Plus, I post some pretty cool stuff every now and then. All right, take care. I will see you tomorrow when we continue the $1,000 account challenge.